let's also welcome Chakri Lokapriya on the show right now. Hi Chakri, good to be speaking with you. Chakri, first up, help us with your take on the defense pack, because in this market rebound, we are seeing a lot of these stocks participating. And globally, of course, Chakri, what we are getting to hear is that European markets are definitely looking to up their game with respect to defense spending. Within the Indian markets, there are some of these stocks which and some of these companies rather which have exposure to the European markets, case in point being BEL, which is one of the top gainers. But help us with your understanding on the defense pack after the correction. Any opportunity that you're spotting?
Good afternoon. Thanks for having me. If you look at the defense pack, basically they've all corrected a good 40-50% on the back of lower Indian government spending, and there was some amount of re-rating downwards of earnings expectations for the stocks. Now then, fast forward into a few months later, now the world is a slightly different place with the NATO itself is in a major flux, and therefore that's leading to a number of individual European countries increasing their GDP percentage of GDP budget on defense. UK is a case in point, and that will be followed by other countries. Now that is good news for Indian defense companies exporting, which is Bharat Electronics, Hindustan Aeronautics, and a few other companies, and therefore, their valuations have corrected. I think the long-term growth will kind of show a little bit of revision upwards as a result, and therefore, yes, we could buy into Bharat Electronics and Hindustan Aeronautics.
Chakri, what explains the selling today in Reliance? I know, I'm getting very sort of myopic here, but it's a mammoth fall of 3% that one is seeing today, or is it just smacking of further FII selling?
You're right, Aisha. I think it being one of the largest companies in the country and a big holding of all the FIIs, and so that's where the brunt of the selling is coming from, I would guess. Fundamentally, the company is very strong. Yes, oil and gas businesses at a cyclical kind of an uncertainty, telecom and retail. Telecom is okay, but retail is still weak. And new energy business is going through a major change, with Trump coming to power and a defocus on new energy. So given all this, the sum of the parts of the stock should take it much higher. But this is once the FII subsides, which I think is still probably some time away.
Let's watch out for Reliance, but within the auto pack, let's put the spotlight on the two-wheeler segment, because, well, of course, when we see today, Bajaj Auto as well as TVS Motors, both the numbers were actually in line to what the street was expecting in. But on one side, where TVS Motors is up around 4%, Bajaj Auto is down about 2.5%. But the selling pressure on Bajaj Auto, Kunal, is really not stopping, because look at the stock price from those levels of over 12,000 levels. The stock is almost half now. When is this selling pressure expected to finally settle in?
Well, difficult to say when it's going to settle in, but I think it should be very soon, because the stock has gone through almost 7 consecutive months of selling, and it's halved almost from 12,700. I think that was the high for Bajaj Auto towards the current level of 7,700. So it's a very sharp correction, and that too for a formidable large cap name, a Nifty 50 stock. In that particular sense, and I think the last 6-7 months we've seen two stocks which have from the same space which have been treated in this kind of a manner. One, of course, is Bajaj Auto, and the other is Tata Motors, and in fact the third one being Hero MotoCorp. And I think all three of them have gone through a very sharp sell-off. So I'm expecting that whenever the stocks get back into a bounce, it could not be one out of the three names which should bounce back, but it should be all three of the stocks which should bounce back. So, but I believe now at current levels, the probability is very much on the higher side that these stocks would eventually go into at least a 10 to 15% kind of a bounce back, if not more, from current levels.
Okay, that's the take coming in on the entire two-wheeler pack, and of course Bajaj Auto in specific. But cement major Ultratech has continued to be in the top headlines. Let's get you the key takeaways from the management commentary on where they see their newest foray, that's cables and wires segment, headed in terms of returns. Ashesha is here with the details.
Well, yes, some important management commentary coming in with respect to the wires and cables foray that the company had announced last week, where they believe that there is enough room for the entire industry, that is the existing players as well as new entrants like Ultratech Cement, to grow. They've also spoken about the return on equity profile going forward. They're very bullish with respect to the outlook going forward. They say that the plant will be live by December 2026. It will help the company generate return on capital of about 20%, return on equity IRR of about 25%, and the company also says that they will be able to achieve EBITDA margin profile which will be in line with the peers and the players that are currently operating in the industry. As far as the capex is concerned, it will entail an outlay of about 2,000 crores initially, but the company also clarified that they will not be entering into any new or additional businesses unless they find it very lucrative, but the initial outlay will be 2,000 crores unless they expand going forward into other businesses. Existing cement business also continues to perform very well. Their outlook for the cement business and their expansion plans are on track. They are looking to increase their capacity to 209 MTPA by FY27. So there is no harm whatsoever as far as their existing business is concerned, and their outlook and the financial profile of the wires and cables business also continues to remain very solid. Now, CLSA has come out with a report where they've upgraded the stock to an outperform rating with a revised target price of 12,700 rupees per share, where they believe that most of the negatives have already been priced in. Remember, last week when the wires and cables foray was announced, the stock had tanked a tad bit, and they believe that the worst is behind us. Concerns have all been priced in, and they believe that the risk reward at this juncture looks very attractive, with concerns of diversification to wires and cables business as well as the profitability most likely priced in. So very positive report that has come in from CLSA with respect to the risk reward, and also on the back of management clarification that has come in, the stock is gaining in trade today in an otherwise weak market.
All right, thank you so much, Ashesha, for getting us all those details. But Chakri, help us with your take on not just Ultratech but the whole cement pack, because there are a couple of reports highlighting that in the month gone by, there were no significant price hikes being taken. But in the month of March itself, there are hopes that the whole industry can actually see decent price hikes. But the key to note will be that, yes, this will be a financial year end, so some impact because of that. And whether they sustain it or not, that is something that we will be watching out for as well. But what's your sense on the cement pack, Chakri, and any particular play that looks attractive to you?
You know, Ultratech and Ambuja and ACC are the clear market leaders in a game which has become, which is volume led by Ultratech and ACC. Against that environment, the volumes are likely to go up, given that economically India is still in a weak spot and will improve going out. Second, pricing has not increased for the whole sector, and now we're beginning to see some amount of price increases, and that again will be led by Ultratech and Ambuja. So because given that the price increases have been below inflation rise over the last couple of years, I think there is enough room for them to increase prices. Now, third, in terms of their foray into wires and cables, now if you look at Ultratech, under the same roof of their distributor, they would sell cement, they would sell paint, and they would sell wires and cables, all belonging to the same construction segment. So the influences are the same. The guys who buy cement are the guys who buy wires and cable, and Ultratech, having a very strong brand name and presence and distributor reach, I think would be able to take market share very quickly, and therefore it will be accretive to Ultratech earnings over time, and therefore it's a good thing.
Right, okay, that's the take coming in on Ultratech. But what about, those beaten down names from within the wires and cable segment? What's happening with Polycab? What's KEI up to? Are they seeing any recovery or not? That's also going to be something meaningful to really look out for. And I think there was a Jeffries note on Polycab as well, wherein they actually say that they're maintaining their buy with a target price of 64.85 from the earlier 7,700, and they're saying that they foresee no impact because of Ultratech's cable and wire foray to at least 2027. And some of these names have actually seen a recovery come by. But Chakri, what about the wire and cable segment? I mean, do you buy into the Polycabs, RR Cable, KEIs, etc. after the one-day correction that happened?
If you went back into a couple of 2 or 3 years, this is what happened to the paint industry with Asian Paints and all the other paint companies. Once you had the new paint companies come in and announce big plans. And I think, it's the same thing repeating all over again. And, at the end of the day, these are all largely commodity businesses. Yes, there is a certain amount of branding. But in the case of, Ultratech, it has strong backward and forward integration. It goes and buys some of its copper from Hindalco, and then it goes and he sells the product from the same distributor channel. So I think the margins for this industry with new competition coming in is likely to come down a little bit. Therefore, yes, indeed, the existing players are likely to see lower margins and therefore lower valuation multiples going forward.
All right, so let's watch out for these counters, but let's also eye some of these brokerage related stocks as well, because just on Friday we did highlight what Zerodha founder has tweeted on terms of the shrinkage in the volumes, and maybe taking cues from that. Stocks like Angel One, etc., are having a sharp knock in today's trading session. But specifically on Angel One, Kunal, if you can help us with your chart check, because there has been a significant decline on this particular stock. Where do you see the stock headed?
Yeah, it's managed to break below major support, and that was the support over the last 1.5 years for Angel One, just around the 2000 mark. I think 2010-12 were the spot levels, was the major support for the stock. It's managed to break below those levels. What matters over here now is that if we see any kind of a reversal on the upside, so the stock manages to come back about the 2010 odd mark, say by a margin of couple of percentage points, then we can expect that the stock may get into a recovery phase. So as of now, the view would remain on the slight negative side for Angel One, unless the stock, say over the next couple of days, if the market gets into a bounce back mode, also comes back and trades above the 2010 plus mark.
Okay, let's get in some BTST trades as well going before we wind up for the day. Naresh, what's on your list today?
So first would be a buy on L&T Finance, holding on to the 130.35 mark. Stop loss at 135, target price of 142. Second is a buy on Tata Motors, just been in a one-way drift. Looks like a reversal in play for a short-term trade. Stop loss at 618, target price of 640.
Right. Kunal, what about your BTST ideas?
I'll go with the buy on NTPC. That's a chart which has been looking attractive, and I think especially at 310 plus mark, the risk reward would be a slight bit more favorable. Would look out for targets in the range of at least 328 for NTPC, stop loss at 305. In L&T Finance, I would be bullish on from a short term perspective. Triple bottom around the 130, 135 kind of a zone. So would look out for targets in the range of 142 at least. Stop loss could be now trailed to 135.
All right, so all the buy calls rather coming in from our experts, and good to see that after a long time we are seeing a buy call coming in on Tata Motors. So let's watch out for that. Definitely one of those beaten down names. But well, of course, today a good rebound within the metal pack as well. But Chakri, help us with your take. How do you see the metal pack? Because a lot of these news flows related to what's happening globally does impact the commodities and the stock prices back home. But help us with your take on the metal pack, the kind of rebound we are seeing today. Can one trust on this particular basket?
Metals, as we all know, is globally linked to fortunes. And therefore, with the kind of uncertainty out there globally, as well as some weakness in China, therefore the volumes are unlikely to meaningfully pick up much more. But on the other hand, pricing is hardly existent for any of the metal companies. Third, but the valuations are very fair. But given that there's no catalyst for the earnings to improve from the current levels, I would stay away on the sidelines and not really buy into any of the metal names. On the other hand, things like financials, which are all more domestically linked, maybe there, yes.
Financials and not metals is the call coming in. But Chakri, within financials, what is that something looking attractive to you right now? Because yes, financials is coming in as a consensus call from the experts, but help us with your take and any stocks that are looking the most attractive to you right now.
The fall in financials has come about due to, let's say, the slowdown in corporate spending, slowdown in consumer spending, slowdown in government spending. Now, of the three things, after the income tax cut that's happened for the consumers, so an urban consumer will marginally recover a little bit. Corporate capex, is waiting for some interest rate cuts, and I think another at least 2 or 3 rate cuts would happen in the next few months, and then private capex would also kind of pick up. So against the backdrop, I think still we would go into first the PSU banks, SBI, Canara Bank, and then we would go into the large private banks like ICICI and Axis.
Go on for the larger ones. In the meantime, Ola Electric is coming out with some statements talking about the layoff report, saying that they have restructured, automated the front-end operations, and they're eliminating redundant roles. This, of course, is in clarification with the fact that they had given the red card to almost 1,000 employees which had been laid off. So that's that on Ola Electric, some clarification coming in there. And, the news agencies have reported that this was a move which was done to stem losses, and pretty much along the similar lines is what they're reporting as well. Still 3.25% lower for Ola Electric, haven't seen any improvement in that stock. What's happening with the rest of the market? While we're closing in okay, definitely off from the lows of the day, but so from the highs as well. We're closing in absolutely flat around that 22,250 odd level. Better a day for the broader end of the market. Names like Eicher, BEL, JSW Steel, Ultratech Cement and Trent are the ones which have seen some buying kick in. And that's pretty much the case within Apollo Hospitals, Bharti. Some of the technology names as well have also sprung up. But that's not the case with the Reliance, not the case with the Coal India, Maruti, and of course the private banking names like HDFC as well as Axis. Asian Paints as well continues to reel under pressure. Chakri, what's the take on IT? Because the consensus seems to be avoid and steer clear till you know not just what the impact of AI is on IT services companies, but also which way tariffs and Trump's policies etc. are going to go with regards to visa and immigration laws.
Most of the Indian IT companies have actually kind of increased their hiring onshore and in the US. And, so today they are far better placed than they were a few years ago. Second, it's not that offshoring is going to go away. Third is IT, all the Indian IT companies have actually branched into, and they have product offerings. So against all this backdrop, I think the earnings are largely intact given the potential threat of tariffs, which we'll know in probably a week or so. I think it's March 4th. But given that, I think net, I think at worst, you'll probably be neutral. But IT as a sector, I think, if anything, has the most earnings momentum going in amongst other sectors.
All right, that's the take coming in on IT space, but let's also watch out for pharma because that is one particular spot, at least for today, has been holding well. Nifty Pharma is trying to end the day at the highest point for itself, and a lot of these stocks within the F&O basket, stocks like Lupin, Apollo Hospitals within the healthcare space, Granules India, these are doing pretty well for themselves today. Naresh, any particular stock that is standing out for you within the F&O space from the pharma pack?
Looking out for Dr. Reddy's, which has seen a large correction from 1,400 to 1,100 in the last 2 months. And say 1,000, 1,100 was the starting point for the move almost a year back. So that could be a stock which could bounce back from the zones towards 1,220, 1,250 levels.
Right, let's watch out for Dr. Reddy's. For now, the stock is almost trading flat, but Naresh is looking out for a bounce back in this one. But other than that, Glenmark Pharma is also one of the top gainers, and so is Abbott India within the F&O basket. What is not doing well, or not rather trying to end the day in the green for itself within the F&O basket, what we see is that Reliance Industries, well, of course, is down over 2% right now. And other than that, stocks like BSC, IREDA, some of these newly entrants within the F&O basket are ending the day with sharper cuts. But Coal India is another stock which is down about 2.5%. Just last week, we had that announcement related to surprise hike of FSA, but seems like the steam is just lost. And Kunal, if you can help us with your take on Coal India, a bit of a rebound in this one, but how do you read into?
Yeah, I think a couple of days back there was a rebound for Coal India from 355. The stock moved up to almost 375 in a matter of couple of days. Today the stock has given back those gains, and it's come back to that 355, 360 kind of a mark. But I think at current levels, when looking at especially yesterday's volume, I would be of the view that maybe the stock is nearing a short-term bottom at place, because in generally when you see very high volumes and the stock being extremely volatile, that generally marks in a short-term bottom for the stock. I would just waiting for maybe a confirmation about the 20 DMA. If the stock closes about those levels, that is closer to 345, rather 365 for Coal India. if the stock happens to come back as a closing about 365 plus mark, that could be a strong indication that we could be looking at a short-term bottom and a revival at play for the stock over the near term.
Okay, let's begin winding up for the day. Chakri, great to have you on the show. Kunal, Naresh, we'll see you again tomorrow morning.